What's up, traders? It's Mark Sebastian, your only option. And today is the day. Today is the day that Nvidia split and started trading at those prices. So let's see what happened. Let's break it down. All right. So here we are. Nvidia is now split 10 for 1. It is now trading 122.47, up about $1.60. And you can see they actually really tried to dump this thing. It got as low as below 117 on Monday. And you can see it's really seen an uptick in intraday range in and out of this split. I think that is worth noting. We're seeing an increase in kind of intraday volatility on Nvidia. So I actually want to pull up an indicator called ATR. That's average true range. And that's the range that Nvidia trades during the day, not just close to close. And I take a look at what's been happening. This is a trailing 14-day average true range. 4.6 points a day. 4.6 points a day. Do the math, folks. And we'll just use the current price. It's moving almost 4% a day. That is the equivalent of like a 60 volatility. The options are only pricing at about a 42% volatility. Why? Well, when you look at traditional realized volatility, it's not quite as bad, although realized volatility is trading above implied. Take a look at this. The red is how much the option cost. The blue is how much it's been moving on average over the last 20 days. The purple is how much it's been moving on average close to close over the last 10 days. And even that is trading at a premium to Nvidia. So these ranges point toward some increased volatility, some increased algorithmic trading, and typically when you see volatility increasing in a name, that's not always the most positive thing. I think that Nvidia, with all this new stock, right? They split 10 for 1. That increases the supply of stock available out there. That's going to make the moves light. It should, in theory, make the moves less volatile, but take a look. Today, it's moving plenty. Now, some levels that I'm watching are its all-time high, which would be up at 125.58. And then I want to see if it can break these lows. Look at this. Look at this. It has tested 117 3 separate occasions in the last, or almost 4 separate occasions in the last 4 days. So there's somebody coming in trying to unload their position, and then it's getting bought up. So what am I going to do with this Nvidia? Well, when I look at the option prices and I look at how it's moving, I think it sets up for a zone trade. What is a zone trade? A zone trade is a low-cost way of playing high dollar stocks, high value stocks like Nvidia, at a low-cost way, in a low-cost way to express a directional opinion. Trying to short or long Nvidia can be very difficult because the options are even at this level pretty expensive. I mean, take a look. The July 125 calls are over $6, and about $2.50 away, you've got the 120 puts. Those are about $5.40. So we actually have upward sloping skew. That means that calls are more expensive than puts. Typically, when we see that, that's also another sign that a stock is getting a little over frothy. Now, they may try and push Nvidia to be worth more than Microsoft. Right now, as we look, Nvidia is worth approximately $3 billion. Microsoft is worth $3.15 billion. So I would say if Nvidia gets to be worth more than Microsoft, which it shouldn't be, that is a clear sign for, in my opinion, I would be killing all my longs, and then we're at a very toppy level for Nvidia. So I'm going to be setting up a zone trade in the next 2 days, either tomorrow afternoon or Wednesday, and playing for Nvidia to potentially pull back. And the nice thing is I'm going to be able to do this very cheaply because of the way I structure my zone trades. All right, folks. So there is our breakdown on what's traded with Nvidia, what the stock looks like, what the volatility looks like, and what my plan is. I hope you have a great trading week. I am Mark Sebastian. I am your only option. Have a good one.